rough day on Wall Street coming to an end with the sound of the closing bell at the New York Stock Exchange. The Dow closed about 1,000 points down, a little more than 2.5% down. The Nasdaq and S&P 500 closed worse off, with the S&P 500 down around 3% and the Nasdaq tech-heavy down a little more, over 3.5%. So joining us right now is CBS News contributor J.D. Durkin. J.D., when we talked to you, it was Friday. You had a little bit of optimism going into the weekend. What's your assessment today on this Monday?
Lindsay, I got to tell you here, my friend, I'm still pretty much an optimist, believe it or not. I mean, first of all, I always think it's a little awkward for groups who have to ring the closing bell at the New York Stock Exchange on a historically bad day like today.
Yes.
It says, for the love of all things holy, please end the bell early and make this day happen. But, you know, I mean, honestly, Lindsay, since you and I spoke on Friday, I've spoken with so many wealth management advisors, portfolio managers, economists, as well as market technicians. And they say the S&P 500, the overall markets, were overbought. That helps explain why the markets had been reaching all-time high after all-time high throughout much of the summer. In other words, this type of correction, this type of pullback is healthy for the market. This was expected. I should note this is a little bit of a perfect storm of things that maybe we did not see coming. And since you and I talked about the softening in the labor market on Friday afternoon show, obviously you had this major shock overnight to the Nikkei in Japan, that entire index down 12%. Anytime you have a major market around the world that's down double-digit percent, the reverberations will undoubtedly be felt around the globe. And right now, I think investors are looking at a bit of a good faith pullback here because of a combination of factors. But no one I've talked to has said this is a reason for panic. This is good faith selling that is healthy for the system. And I know more than a few wealth advisors who are encouraging their clients to find those buying opportunities now that a lot of those big stocks they might be fans of are suddenly trading at a discount. And are they ever? Because there is certainly a lot of red on the big board today, Lindsay.
Is this sort of a day where you just sort of like put the computer down and just sort of stop looking? Is it going to be a week like that?
It may very well be a week like that. You know, honestly, listen, it's beautiful weather here in our nation's capital. So, you know, I'd say go for a walk today. Don't look at your portfolio for a few days for sure. If that's the type of thing, if you follow it day by day, the month is going to be really interesting because we can't forget we're still in the heart of corporate earnings season. And that arguably matters much more to investors than anything happening with the presidential election or even any of the uncertainty in politics. So you take a look at the next few weeks, Lindsay, we've got some key inflation data that we know the central bank will be very keen on. Big earnings from companies like NVIDIA, which has undoubtedly been the most important name for U.S. equities. And we're going to hear more comments from Fed officials, including Chairman of the Central Bank, Jerome Powell, at the end of the month. His highly anticipated remarks at the symposium at Jackson Hole in Wyoming. That'll really be the best attempt we have to hear from him and his thinking as we get a little closer to the Fed's next meeting in September. And of course, that's expected to be the big one when finally, after more than 2 years, we are expected to finally get a little bit of relief with an interest rate cut.
Well, and the Fed doesn't really react to market volatility, right? I mean, what would have to happen for the Fed to say, you know what, we're not even going to wait until we meet in September. We're going to cut rates earlier?
Would have to be a major crisis, the likes of which we saw in 2008 or in March of 2020. And honestly, no one I talked to from my reporting over the last 5 days says that that's where we are. Chairman Powell has been asked a number of times, how closely do you even track the stock market? And he's always a little cagey in that response. He's very careful about what he says and perhaps even more careful about everything he doesn't say. So undoubtedly, the Fed is recognizing what is happening across the major market indexes. But this Fed, for the most part, all of the criticism aside, has been very consistent. Our goal is to bring inflation back down to 2%. And right now, the most important reading of inflation is core PCE. We get that data point released the final Friday of every month, and that's still at 2.6%. Now, given the softening of the labor market conditions, the Fed may feel encouraged, even with core PCE inflation where it is, to move forward with an interest rate cut. But I don't think anything that happens in the stock market in terms of a hit to people's portfolios or 401ks is really enough to move the Fed. I mean, we can't forget the S&P 500 is now trading all the way back down to where it was 2 months ago. It has still been an incredibly resilient all-time high series of markets, even despite the recent jitters notwithstanding.
What has recent data told you about consumer habits and spending?
Well, we've seen a lot of shift for sure. And I've really taken my cues personally from a lot of the food services companies. So about a year and a half ago, you started to see the pullback for consumer spending in names like Dollar Tree and Dollar General. You had that work its way up to companies like McDonald's and Mondelez and Kraft Heinz. So food services companies and corporate companies have been telling us warnings about a consumer pullback. And then I also pay attention to companies like Walmart, which are telling us that for the first time, more six-figure income earners of Americans are shopping for their day-to-day basics, their necessities at a place like Walmart. So it's really interesting during corporate earnings season to listen to these companies about the change in consumer sentiment and how consumers are spending their money differently today relative to even a few months ago. So we're definitely seeing those pressure points on the consumer. I think ultimately we're just seeing discretionary spending be exactly that, a bit more discretionary. People are picking and choosing what high ticket, big budget items they're choosing to spend their money on, and they're trying to find cheaper alternatives for their basics in the day-to-day spending.
JD Durkin, thanks so much for joining us.